Welcome back. We've looked at production numbers. It's now time to look at hiring numbers. And joining us is the big man from the hiring space, Hitesh Oberoi, Chief Executive Officer and Managing Director at Info Edge. Hitesh, good morning. Thank you very much for joining us. Have a great 2023. Good wishes from all of us here. But we have to begin by asking you the quarter that was. You know, we heard that IT hiring has come to a standstill from one of your competitors. How was the experience at your end?
Firstly, a very happy New Year to you and all your viewers. So we are still not complaining. The hiring market continues to be good. You are absolutely right in saying that hiring for IT professionals has slowed down over the last couple of quarters. But that market had also gone berserk. I mean, most IT professionals got, 30-40% increase for a couple of years. Attrition rates were at an all-time high. Things are now going back to normal in IT. But the non-IT market continues to be red hot. There's a lot of action there after a long time. Things are opening up. There's revenge travel, revenge shopping, revenge tourism. So we are still not complaining. We are okay.
So those are the sectors who are hiring most: tourism, travel, hotels, hospitality. Which would be
almost all non-IT sectors. Almost all non-IT sectors. So the auto market is hot. The telecom market is hot after a long time. There's a lot of construction activity. Real estate is very, very solid. A lot of hiring in healthcare, services in general, banking, financial services, insurance. So almost all non-IT sectors are doing very well after a long time. They're certainly growing much faster than what they were growing at before COVID.
Okay.
But yes, the IT market has slowed down.
What about e-commerce and retail? Because, the industry participants indicate that the demand, especially in festive season in e-commerce and retail, was not as buoyant as one would have expected. How are the hiring trends there?
So, see, e-commerce is a little different because in general, there is the startup world has slowed down. People are taking corrective measures. Even e-commerce sites, I'm sure they've added, they become more expensive over time. People are charging for delivery. There are all kinds of other sort of things happening out there. So the internet scene, the IT hiring scene, the startup scene, there's a lot of pain there right now because of what you're seeing on the funding front. Funding has slowed down. It's not easy to get 20 million, 50 million, 100, $200 million checks anymore. All these companies are under pressure to sort of make money, to break even. So what you're seeing on there is a little different. But I'm sure on the offline world, things are a lot better than they were maybe 2 years ago or even 3 years ago before we went into COVID.
Okay.
Hitesh, just wanted to focus on IT and digital as a percentage of revenue is what? They're around 45-50% odd. I think you're,
Yeah, about 50%.
50% odd. All right.
Yeah.
But real estate, you're seeing some traction is what you said. And your 99 acres, the billing is only 14% or thereabouts higher in comparison to pre-COVID levels. Could you explain that to us? And are you seeing any signs of slowdown in this rising interest rate scenario?
No, the real estate market continues to be buoyant. In fact, it's not been like this in a while. There is prices are going up. There's a lot more buying happening than earlier. Everybody wants to either rent or buy a bigger home. Affordability has gone up. Interest rates are reasonable. So we expect this market to continue for some time, unless, of course, things change on some of these fronts. Our business is also looking up. In the first half of this year, we grew at more than, I think, 40% over last year. Of course, there's a lot more competition in the online real estate space, and that may be impacting our pricing, in some places. But on the whole, we are seeing a lot more activity in this segment and in this sector than was the case. That has been the case for the last few years, in fact.
Okay.
Now, what we don't want is it to become too easy for developers and builders to sell real estate, because then we are not required.
Okay. But you'll make more than the 14% Nigel was referring to in terms of billing.
Well, see, we have some, like I said, in the first half of this year, we grew at more than that number. In the second half, a lot will depend on how we execute. Like I said, there is a lot more competition than was the case earlier in this segment. So, our growth rate should not be taken as should not be taken as a proxy of what's happening in the industry.
Sure. Okay. I want to come to the more important part that investors watch out, and this is not labor or employment related. how are you behaving as a financial investor? You know, what is the total amount of money you invested in startups now that you got perhaps a golden opportunity in 22? I mean, if you can give us a number.
So like all financial investors, we've also become cautious because of what's happening around us. But we were never in the 20 million, 50 million, $100 million check game. We were always early stage investors. We've always supported young companies. Our first check size has normally been less than a couple of $1 million. As they, in that space, we continue to see a lot of action. There are many new entrepreneurs, there are many new opportunities, and there are enough people willing to back them. But at the same time, every financial investor needs to put aside some money to support their existing investments, because, like I said, it's everybody has some good companies in their portfolio which will need support, and this may not be the best market for them to go out and get money. So you need to sort of conserve your capital. You need to put aside some money for your existing investments, and then with the rest you do you make new investments. So market has slowed down a bit, but every time you have a slow market, it presents a lot of good opportunities. And we have to be sort of willing to grab them.
That's what I'm asking you, Hitesh. Did you put more money in 22 compared to 21 or less?
I don't have the exact number, but because we don't really have a budget, we don't operate like that. But we continue to be open. See, even both on the strategic and on the financial side, to new opportunities. It's not as if we put brakes. If we see good opportunities, we'll go after them.
Just a couple of final questions. Give us an outlook on what's happening with Jeevan Sathi, because this freemium model is driving volumes, but it's turned loss-making, and there's quite a bit of, a competition there as well. What's the future?
Early signs are very encouraging. The freemium model is working for us. We are gaining. See, in the internet business, you need to first get users. You need to, get the network effect going, and then revenue follows. We have been very successful in acquiring new users. Our traffic share has gone up. Our user share has gone up. We're enabling many more matches than earlier. Yes, we've taken a hit on revenue, but we are not spending as much money on marketing as we were spending earlier. So in fact, our profitability may improve actually going forward if we are able to sustain this. And of course, we are working on new ways to monetize our customers and our users, but that will happen with a bit of a lag.
Okay, and just finally, before we let you go, your revenue growth has been above 50% for the 4th consecutive quarter in Q3. You think you will maintain that trend?
See, what we are very forward-looking, so we focus on collection. So collection growth will definitely not be 50% going forward. But yes, revenue growth, because we have a lot of deferred revenue, we recognize revenue over the life of the subscription and not when we collect. That will be much higher than collection growth for at least some time.
Okay. Hitesh, thank you very much for joining us and for leaving us with a huge optimism that every sector is hiring and, other than IT. And that's extremely good news for everyone who is watching and listening to you. Thank you so much. Have a great 23.
Thank you.
Okay, Nigel, you have another guest.
All right. Well, let's get to RVNL. That's the next stock on our radar. The stock is up close to 100% in the last 1 year or so. The company received a whole host of orders in the month of December. Well, to understand more about the order bins, the capex outlook, and how is the execution as well likely to shape up, we have Mr. Rajesh Prasad, the Director of Operations of RVNL, who joins us on the show. Good morning, Mr. Prasad. And first of all, Happy New Year to you, as well as your family and your entire team. You'll give a good return to shareholders in the past 1 year or so in terms of stock price returns. And the street is going to be waiting by to hear what's the outlook for this year. So let's get straight to that. What's been the order inflows, first of all, in Q3, if you could give us a sense out there? And I think you had a targeted order inflow of around 20,000 crores odd. Do you want to revise that number?
Okay, Mr. Nigel, Lataji, Sonia ji, very good morning.
Morning.
And this is the first working day of the year 2023. And before I give answers to some of the questions that how the business is shaping up, what is the order inflow, Q3 and the future roadmap, I would like to submit few things. Kindly allow me for a minute. Yesterday was the new year, and 1 week before that, we had celebrated Xmas. In time to come, we are going to have this Pongal, Makar Sankranti, Republic Day. I am telling all this because RVNL is connected to all this. On 25th December 2002, the NRVY, National Rail Vikas Yojana in RVNL was conceived. The 25th December is also celebrated as a good governance day, which is the focus of this company to have a good governance. And this good governance day is celebrated in memory of the then Honorable Prime Minister Atal Bihari Vajpayee, and who is the man behind the creation of this Rail Vikas Nigam Limited. 24 January 2003, this company was incorporated. And so this company is 20 years young, matured, vibrant, dashing, dynamic, pushing,
Lovely.
rearing to go, always moving forward.
Mr.
It is a
Prasad,
high-performing company.
Mr. Prasad, I love the way you put it, and you have definitely
Numbers, not
you
adjectives.
have revved up the engine for this particular interview. So let's get straight to the numbers then. What's the order inflow in quarter three, and year to date? What is it? Go ahead.
Let me talk about the order book. The first question which you asked about how the business is shaping up. So earlier we were concentrating only on the railway infrastructures in India, but now we are focusing all kinds of infrastructures and not limited to India. So the present order book is around 55,000 crores, and out of that 9,000 crores we have taken from the business development, and first time we have got an international contract in basically the Maldives for a port connectivity, for a port work. It is a pure civil engineering and marine works. And we have signed an MOU with government of Kyrgyzstan. And these are the very sensitive informations. And all the time we are releasing such statements through our this LODR and the investor sections of the website. So what we can say is that we are diversifying ourselves. I will cite one more example. We have participated in a bid of around 55,000 crores plus for manufacture of train sets. There are 5 bidders in that, and RVNL is one of them. Like Alstom, the Medha, the Siemens, they are the other bidders. So we are having a focus to diversify. And 2022 was an extraordinary year for the company. And if you permit me, then I'll highlight, or otherwise you ask next question, I will give the...
Okay. No, the question actually is related to what the numbers we are hoping to hear from you. You know, we get every month the fiscal numbers, and sometime back the indication was that railways have spent practically the entire amount of the budget given to them. One of the best spenders in capex was the Railways Ministry. So I want to hear from you whether you are likely to maintain the tempo or even better. In Q2, you did 22%, I think, in terms of revenues growth, and you did better even in terms of EBITDA. You, I think, saw a 39% growth in EBITDA. Is that a maintainable pace?
Okay, so I have been telling all the time that the top line will be 21,000 crores plus, and the bottom line will be 1,100 crores plus. And if you compare these figures with respect to the FY 21-22, we are up by around 15%. So the last year's performance, if you compare, 100% we are going to achieve these numbers. And we are also connected to the physical targets. So last year we had commissioned 1,000 kilometers. We are also trying to achieve 1,000 kilometer plus during FY 22-23. And again, the physical performance is up by around 10 to 15%.
Okay, so you said 21,000 crores is for FY 23, right? Your revenue target?
Yes. Yeah, FY 22-23, this is the revenue target.
And what would it be for FY 24? What kind of growth can you eke out?
We want to maintain an order book of 1 lakh crores all the time.
Okay.
The idea behind this is that if you are having a turnover of around 22,000 crores, so we should have at least 3 to 4 times order book. Presently, it is 55,000 crores, and we have participated in the open market to the tune of around 50,000 crores. If we add the train set, then it will be 1 lakh crores. So in time to come, we are going to bid more aggressively, and we are focusing more on the infra projects, not limited to India only.
So this 55,000 crore order book that you have currently, how much of it is from the export market? Just trying to understand what could the opportunity be, particularly from exports?
55,000, the export market, if you see the background of the export market in December 2021, Ministry of Railways issued an office memorandum to MEA regarding the performance of this company, and they started recognizing and considering RVNL. So it is only 1 year back that we got the mandate for getting this export business. We have received a business of around 1,600 crores in Maldives. It is a very sensitive project. We have signed an MOU with government of Kyrgyzstan. There we can have the orders for more than 20,000 to 30,000 crores. We have already formed a JV, which we have basically notified to the SEBI and through our website. So the updates will be available in the website, but in time to come, a lot of positive news are likely to come, and the investors will feel very happy about this.
All right, Mr. Prasad, very quickly, if you could tell us, that JV that you're talking about with the government of Kyrgyzstan, that's close to around $4 billion, I believe. Could you give us some kind of
This is $2 to $3 billion. There are 4 projects. Basically, it is around 1,000 kilometers, and there is a project of 225 kilometers.
Got it. Now, the project-wise breakup we'll get to in a bit, but when do you sign an LOA for this multi-billion-dollar opportunity that you're talking about? And you've also been talking about growing by 20% for the next few years. Are you factoring this in? Okay, all right. Unfortunately, I think we have that line that snapped. Lata, I think, called it as well.
Oh, okay. Well, we thank Mr. Prasad if he is listening in. Thank you very much, sir. We have to take a break, and we will be back with Mitesh Thakkar for the trading strategies for the remaining part of the day. We'll also have Manisha to give us the commodity. Back, the market's kind of taken a U-turn, and U-turn up. We started in the green. We did not heed the SGX Nifty cues, but the Asian markets seem to have heeded our cues. We are seeing a goodish bit of green on the Asian screen and on ours. Mitesh Thakkar is back with us. Mitesh, what's the next call on the indexes? Want to go positive now?
But I still believe that getting past 18,250 might be a slightly difficult task in the short term. So trading with more of stock-specific biases, and metals is something, which is clearly a sector buzzing for last few days. So Tata Steel is on the buy list. Keep a stop below 11375, which is today's low, and look for targets of 124. And the other one which I have is a sell on Cipla. Pharma is kind of correcting. So Cipla is a sell with a stop at 1085 for targets of 1035.
Thanks a lot for that. Always great to start the year with some green on the screen, and that's what we've got today. So the Bank Nifty is now up 350 points. But Nimesh had earlier highlighted the metal stocks in the standout brokerage report of the day. He's back to tell us why. Nimesh, over to you.
Hi, Sonia. So the entire metal pack is buzzing in trade on the back of the first upgrade for 2023, which is on the metal stock. So Jefferies has upgraded both Tata Steel and Hindalco to buy from hold, and they've raised the target price as well. Jefferies has been cautious on the sector for the last 1 year now, and now at these valuations they've turned positive, and they've raised the target price on Tata Steel to 150 from 95 earlier, and on Hindalco the target price is now raised to 600 versus 390 earlier. Now the key reason for the upgrade is they believe that China has started to ease COVID policies, and they're going to support the ailing property sector, both positive for the Indian steel companies. In terms of numbers, they believe the worst in terms of quarterly margins for the quarter for the Indian steel companies, and in terms of earnings cut for both Tata Steel and Hindalco are both behind. So the worst is in the price, and from here on things are going to improve. In fact, Tata Steel is a preferred bet for them in the metal names, largely on back of attractive valuations plus improving asset footprint and balance sheets. On back of that, a big upgrade in Tata Steel, but they've also upgraded Hindalco to a buy with a target price now to 600 from 390 earlier.
Right, Nimesh, thanks a lot for that. And both of them are the two biggest gainers on the Nifty. Let's talk about MOIL as well in sync with the metals pack. Well, they came out with a couple of disclosures yesterday. They've increased prices on manganese content of 44% and higher by close to around 15%. And with the manganese content of less than 44%, well, the increase is close to around 7.5%. So that's good news that the prices have been increased, point number one. And that's backed up by good operational update for December 2022. Production is up by close to around 18% on a month-to-month basis, and sales as well has jumped up by more than 90%. So both those pieces of news, higher prices, better production. That's why, in fact, the stock is up 3.5% odd. But Sonia, you're tracking Ashok Leyland.
Oh, yes. In fact, all the commercial vehicle makers have reported very good numbers, and Ashok Leyland stands out because of a very strong set of numbers. Total sales growth for Ashok Leyland has gone up 45% year on year. A big move coming in the medium and heavy commercial vehicle sales. And if you look at a breakup of the numbers itself, it's really the bus segment that has done very well for Ashok Leyland. And that's the one, after a very long time, buses are coming back in terms of sales. So that's looking good for Ashok Leyland. And overall sales growth of 61% in the medium and heavy commercial vehicle segment is what's driving the stock this morning. But let's shift focus to the commodity markets now. Manisha is joining in. Manisha, what's the one commodity that you're tracking today?
So now there has been so much talk about the metal stocks, so I am going to talk about the metals and the underlying commodity on how the moves clearly can be in 2023. You know, we are looking into 2023 as we get into the new year with recession concerns. We're looking at COVID flare-ups yet again and Russia sanctions. The impact of that on whether or not it will be spilled over on metals is something that the street will watch out for. Apart from that, it is about China, which is managing COVID as of now with Class B infectious disease. Earlier, it was a Class A infectious disease. So we have seen markets open up because of that as well. And then the favorable domestic Chinese policies. China also has injected a lot of liquidity into the markets there, and winter stocking is what is happening from many Asian and European countries, and that could be supportive for metals going forward. Take a look at the fact that you have seen the inventories continue to decline as well, so much so that the stocks on LME as we enter into 2023 are the lowest in last 25 years. If you look at the aluminum stocks, those have declined by 72% in 2023. You have zinc stocks down by 90%. Zinc inventories on LME actually are the lowest in last 100 years. And if you take a look at the lead inventories down at 15-year lows, copper inventories are just about at 5 days of global consumption. So we are looking at a lot of support coming from these factors. And nickel, there's a lot of shortage on LME as a deliverables in the sense of numbers, and that continues to support the prices there. Metals in 2022, well, nickel is the only outperformer there, 45% of gains, and we have seen best gains in since 2010 come in for nickel there. Not so much luck with other metals, but within the ferrous space, you had iron ore prices, which are now trading at a 6-month highs. And from a negative in last couple of sessions, we've seen a gain of 1.3% come in for the year. Copper, 13% down for the year, and this is the first annual drop that we've seen since 2018. Tin saw 36% of a decline. This has been the biggest annual decline since 1990 coming for the tin prices as well. Take a look at what you have seen other metals do and the expectations going forward as well. So this is Citi's report suggesting that they're bearish on nickel and zinc for the next 6 to 12 months, but they're bullish when it comes to platinum, palladium, iron ore and aluminium as well. So those are the metals that they are putting high on their list. Bullish outlook continues in case of copper as well. We did see all-time highs of nearly $10,900 a year. And you have Goldman Sachs expecting new all-time highs. Bank of America is talking about $12,000. But almost everybody else expects the copper prices to trade within a range of 8,000 to 6,465. Actually, is the most bearish when coming in from BNP Paribas. So a big range again, looking forward in case of copper, 6,000 lower and 12,000 on the higher side there. The next and the final chart should show you on what we've done in sense of prices from their 2022 highs. So almost all metals in the negative from their highs, and the biggest declines clearly coming in from copper and aluminum and zinc, where we have seen prices decline anywhere between 30 to 40% from 2022 highs. So the market believes that as and when the demand comes up, there's a lot of gear to go higher.
All right. Thanks a lot, Manisha, for that. Let's slip into a quick break. But on the other side of the break, we have an exclusive conversation lined up with Ramdev Agarwal of Motilal Oswal Financial Services. He joins us right here in the studio to give us an outlook on how the next year could shape up. Stay tuned.
Welcome back. And we're going to usher in 2023 for the equity markets with perhaps the best-known veteran of Indian markets, Ramdev Agarwal, Chairman and Co-founder, Motilal Oswal Financial Services, joins us now. Good morning, Ramdev. I wish you a very prosperous 2023. Thank you very much for starting it with us.
Yeah. I mean, very good morning and very happy New Year to you and all CNBC viewers.
Thank you. Happy New Year to you as well. How are you feeling about the markets?
Okay. I mean, like, see, there's no excitement of grossly undervalued market, so you're going to rocket or something like that. So, and then global uncertainties are too many. So, right now, it's a kind of a subdued thing, but GST collections are very well held up. That's one data that gives you confidence that things are all right. So I think things are all right till November, December. So I think I would believe that 23 we're starting in a very strong note of economic activity, heading into a lot of elections and things like that. And worst of global uncertainties, still the Ukraine war is on. Still inflation war is not over. China is still struggling with the COVID. So I think we have more of the same from 22, and hopefully first half will be somewhat like this. Second half, let's say 6 months is a very long period.
Yeah, and if we overcome those, then we could have a glorious second half.
I mean, I don't focus that much on where the market is headed. I'm more focused on where my stocks are.
I'm coming to that. See, first of all, congratulations, you've moved into a new house. Yeah. You would know what real estate is like. So tell us if that's going to be another trump card year, another big year for real estate stocks.
Yeah, stocks are different from the real estate.
From the
Real estate
reality.
itself is very expensive. I mean, at least in Mumbai, what I hear, Andheri, Juhu and all, they are more closer to 75,000-80,000 rupees square foot for a worthwhile ready stock. So that seems to tell me that there is a very good market. Now the issue is how do you execute? How much inventory you can deliver in the marketplace, and how your authorities are really hearing this as a problem rather than as an opportunity to,
to kickstart the economy.
Yeah, so I think if they push the system well and permissions and all the hurdles are being cleared, because if government wants or bureaucrats want to clear the hurdles, they can clear it overnight. So once that thing is done, then it is for the entrepreneur to play the game of quick completion. Consumers will demand. So I think it's...
So should I understand that you don't want to play real estate as one of your top bets?
They're not... See, for me, year of 23 will be practicing consistency, because that's what the wealth creation study we did. Okay, and they are not particularly consistent performers, you know. And so, yes, of course, we'll look at it, some of the bigger ones who are stable, large, and they have the, actually they have the potential to be consistent.
Yeah.
But they don't, the way they have played in last 10-15 years, that has not been very consistent. So I think now RERA has come, playing ground is very, very much more, what you call certain, I would say, consistent, I would say. So it is for the entrepreneurs in real estate to deliver, particularly the corporate entrepreneurs who have come in. They have a large opportunity to deliver very predictable performance going forward into, and as we see those things are happening, maybe we'll start getting interested slowly into the sector.
Okay, you can wait. You know, our director very helpfully pulled up all the sectors that moved last year and which didn't. And the big trade really was going long on banks and short on IT.
Yes.
What do you think the big trade of 2023 will be?
Yeah, so I was wrong in IT. I was right on the banks. Banks were very clear that yes, it's going to happen. But I didn't know IT will be. But you know, these two are like literally 25% each. Or actually, bank is bigger if you combine private and public. So financials, I mean, lenders are like more like 30%, 32%.
Yeah.
Banks are, sorry, IT is about 23-24% of the total corporate profits. Now, I don't think both can do well together. The way index is constructed, I don't think both can be at a high. I mean, anything can happen in the market, but I'll be very surprised that banks and IT both will be at a high. If bank is at high, I mean, can you believe that people are selling, I mean, IT is down by 25-30% and PSU banks are up by 70%. So that's the contrast you're seeing, you know. So I think markets are rotating, and there was an excess kind of depression in PSU per se, but all the PSUs. Literally no wealth was created. In fact, they were the biggest destroyer of wealth in the last 5 years. And now I think finally enough is enough, and there is some rally in this particular
But it's good to go for more. The banking
looks like, I mean, banks definitely has some more steam, because there's a credit cycle. They've just started lending. They have to get into bad lending.
Okay.
Before the trouble strikes, and you will know first. You know, when
when there is exuberance.
Exuberance, and exuberance will not happen in the same place where it happened last time. Last time it happened in corporate loans. This time, I don't know where it will happen.
So since we're talking about banks, I had to ask you about the HDFC group. You know, we put out a study where we talked about how all the stocks, HDFC Bank, HDFC AMC, HDFC Life, the valuations are looking attractive, and there's been a large degree of underperformance in the last many years. You think the fortunes will turn this year?
This year, I don't know, but it will turn. Because markets can take much longer than you and me can forecast. But if there is a value, if they keep growing at 20% plus and the P multiple remains at 20, I don't think it can stay for very long. Such a credible name, and if there was a fear about the transition, all the change over merger and change in leadership and all, even that will be proven in next, I mean, it's already 2 years, another year or so. I think then people will reassess. And what happens is that there were things which were below HDFC. So they have come up. Now they will be at HDFC level, and market would want them to go ahead, but it cannot go ahead unless HDFC also pulls up. So, you know, it's a relative kind of a situation. My sense is that better days are ahead. In terms of valuation, earnings will come whatever for the sector and the companies. But it is more about in fact, the bigger game in the market, I mean, if you see the de-rating on 12 months basis, is not so much about the earnings. It's about the change in the P multiple. Okay. Like, say, private sector, public sector banks were at 0.2, 0.3 price to book. Now they are at closer to 1 time.
Yeah.
And that's why they are 3x, 2x, 5x. Not because the earnings are
Improved.
that much bigger.
Yeah. There's more faith in them. Okay, I'm looking at your top 10 consistent wealth creators.
Yeah.
Outperformance, number of outperformance years is 5. So you have over there alkyl amines. Actually, you have IT companies there, Mindtree, L&T,
Yes,
Infotech.
yes.
So in spite of the, not so great year for IT, you persist with some of your gems?
Yeah, see, it's very large allocation. And IT is very high quality, very consistent. The issue is that where the growth is, and see, it will grow. Now, whether it will grow at 5% or 20%. So market thought that post-COVID, the kind of surge came. There they thought that it will continue for some more time at 20%. But little they realized that attrition, attrition and slowdown in the US economy, that could take little toll on the immediate growth. But I think India's foundation is on IT. So we should not be too much underweight.
Okay.
These are the few, see like...
Is it already cheap enough for people to, over-allocate?
Not over-allocate, but not to remain completely away from it. Because it's so unpopular.
Okay.
See, for the whole year you have done 25% minus. What more do you want to...
Fair enough.
And you may not get this chance again, right?
The
to buy
markets
the
are at
stocks,
22p.
Yeah.
See, we have to look at everything in relative terms. If in Juhu, the average rate is 70,000 and the house you are looking at is say 90,000, it's only 15% premium. So what you are looking at today, say TCS would be about 25, 26. That's the leader, or
yes.
Infosys would be more like 23, 24. And your index is 22. So are you thinking that in Infosys TCS is just about 10% premium to the whole lot of Indian economy? No.
That's true.
That's true.
That's a nice one.
There are these pockets which did really well last year, whether it's defense, rail PSUs in general. Is there merit in adding more to these names?
Frankly speaking, I have not done a lot of work, but because Atmanirbhar Bharat and the kind of at border, government's commitment to become much more, Atmanirbhar on defense procurement, and the size of the economy which is becoming bigger, borders are not very, friendly right now. So I think the tailwind is very strong. Now, the only thing is that it's little lumpy, So you have to look at the companies which have done well in the past. And they are all monopolistic, all of them are monopolistic, which are more asset light, But I think, frankly speaking, that could be a very interesting sector to see.
Okay, home improvement as a theme. I mean, you have Astral in your consistent performers list. More like that, maybe Century Ply. I don't know what you think of as home improvement. Serra.
Yeah. See, if Indian economy keeps growing at 6% plus, I mean, like for 23, 24, the prediction is all the pundits who they are talking about 6% plus. If that 6 to 7% it comes, and with that say 5-6% inflation, you are talking about 10, 12, 11% nominal GDP growth rate. And if that is associated with say even 12-13% corporate profit growth, I'm not asking for 15-20%, 12-13%, I think we'll do very well.
Okay. No, it's not over 6, sir. The average is lying between 5.5 and 6, but even then your nominal GDP number seems to be the consensus number. I take your
so
point
nominal, if it comes to about 10 to 12, and we match the corporate profit to GDP at 12, because now raw material prices are little lower than last year. So I think there will be a little more recovery on the corporate profit side, and hence it should match the earnings.
Then give us the alpha. That is your comment for the earnings as a whole.
Yeah.
Right? 15% earnings or 13% earnings.
Yeah.
Where will the alpha? See, chemicals was once a big season, and the alkyl amines and stocks like that. Would SRF, would all these still be a way to go? Where would you see alpha? Sectors, if you don't want stocks.
Sectors.
Or even stocks, I mean, whatever you feel, depicts the alpha well.
Yeah, so, no. What happens is that the consistency which they have shown in the past, they will continue. Most of them, they will continue. So don't go too much away from the ones which have performed in last 10-15 years. The problem is that we are too much focused on future. We don't look at the past. And the guys who have performed in the past, they are the guys who are going to perform most likely. I mean, like not 100%, but 70-80%, those are the guys to look at. Now, if they, say like you said, Astral and all, they have not done well because the polymer prices went through the roof. It could be the time for this die-hard, fast runners, for them to come back. So I would look at them. I mean, the companies which have performed very well, but they are right now literally out of favor. Like entire IT, they have done very well. So now, is it the time? Is it after 5-6 months? That I don't know.
What about new age tech companies? Is it the time to buy? I mean,
Digital companies, yeah, that's
Commerce,
Nykaa, Zomato,
yeah, they
Paytm.
start studying them because they will change the track. Last year they said growth at a loss. So they were not ashamed of incurring losses. They were very proud of incurring a lot of losses. Now they are saying we have to get into profit.
Profitability.
Like Bajaj said, we want to be in the profit this year itself. So that kind of change. But saying is one thing, doing is yet another. And actually making profit to the extent of their market cap. See, basically they have 10,000, 12,000 crores cash. So of course, first level of valuation is that they are worth that much. Because outside that, they're incurring losses. So to justify, say from 10 to say 30, 35,000, 40,000, that is for additional 30,000, they have to show that they can make that much profit. There's a lot of promise. But we bought the promise last year. But now the life has changed. Today you are saying, show me the money and then I'll give the valuation.
So would you buy now or would you just wait to see profitability?
I would now, having burnt fingers once, I will look for the profits to be visible.
Okay. Okay. Finally, I wanted premiumization. We called Bajaj Auto. We've spoken to people on the channel. Everyone's speaking about premiumization.
And two-wheelers?
Generally,
yeah.
Even cars, you know, premiumization seems to be the theme. So would you look at people who cater to the upper class? You know, your favorite, Titan, stocks like that. Is that a theme?
Yeah.
Or is it staples? What caters to rural masses?
Like, say you said Titan. Titan per se is about not premiumization. Not that much about the premiumization. It's more about from unorganized to organized. Now we know the jewelry market.
Yes.
You go to any city, they're not number one. Titan is not number one in any city. They are number 4, 5. There are 4, 5 local jewelers who are number one. So, I mean, in 30, 40 cities also, if they come anywhere close to number one, I think the size will be gigantic.
Okay. All right. Thank you very much, Ramdev, and hope you have a superb 2023 yet again.
Yeah. Thank you.
Okay. Well, we have to wrap up, and there is a very important Supreme Court judgment awaited on demonetization. That after the break, we wrap up on Bazaar, and there's more coming up for you.